Hey everyone, me Kevin here. This is a big update for HouseHack, $16 million one at that, and it has to do with some refinement of some of the further practices of our business and how we're going to scale HouseHack into what I hope will one day have a greater valuation than Zillow, Redfin, and Opendoor combined. We'll go through in this video warrants, fundraising, multifamily versus single, other updates, changes, and we'll also give you a little bit of insight on, well, a reminder maybe more or less on how we think investors in HouseHack should expect to make money. So let's get into it. The very first thing is that we'll probably do a call for warrants from the accredited round in Q1, maybe as early as January. So be prepared for that if you have any of the outstanding about $13 million in warrants. That means you'll have about 60 days to fund to make sure that your options do not expire worthless. Now, for those of you who aren't familiar with warrants, they're kind of like call option contracts. They give you the right to buy at a certain price. Those will be the last investors who will be able to essentially invest at a 1-to-1 valuation. If we do another fundraise, which we don't know if we will, if we do, maybe we'll do one in Q1, but if we do another one, it would probably either be at a $1 to $1.5 valuation or potentially 2-to-1, since that's what we think the company is worth with just phase one. 2-to-1 is what we think the company is worth with good foundations for phase one, and doesn't even price in anything for phase two, which we'll touch on that a little bit in this video as well. You can't transfer warrants either, but just keep that in mind. There's an update. Now, a lot of people have been asking us about this potential for institutional investors to be banned from buying single-family homes. This is the result of legislation that was introduced from some congressmen and women who are looking for potentially banning single-family homes from being owned by institutions and phasing in a 10-year option, essentially, or opportunity for those existing investors to be able to sell off those single-family homes. I want to be extremely clear about this up front. We think there's about a 5% chance of something like this, quite frankly, passing within the next 30 years. I'm not even talking about in the next year. I think there's about a 0% chance of this passing in the next year, mostly because you have elections coming up. This legislation was introduced by Democrats, and this is obviously not a political video, but let's be clear, the last thing that will get passed is something that is supported by only Democrats between now and the election, because you have a Republican-controlled House, which means really we're only expecting bipartisan legislation to get through, and this is not that. Even beyond that, whoever wins the presidency in the next round would have to sweep Congress and then have this as one of their actual priorities before losing potential full control in midterms again after 2024 and 2026. So we really think this is a very low chance of occurring any kind of single family ban. But even if it were, we can actually do wedge deals on multifamily. Now, many of you might not be as familiar with this because I talk so much about how much wealth you can build in single family, and we're doing a great job with this. We've got over 12 wedges now. We're probably between 12 and 20 wedges on single families if we consider if we get the offers we're writing and the offers that we're primed to win, but we're just waiting for court approval on some probate sales for. That's going to add to what we've already got going. We're doing really well already with our single family deals. And quite frankly, with the deals we've already bought, we think we're averaging over $100,000 wedges, which is phenomenal because quite frankly, like the first few deals you do, it's like, okay, wow, we got to get everybody really refined. Like everybody knows the vision, but when you start a company, the gears aren't well oiled yet, and then you well oil them, and then it's like, oh wow, okay, now it gets even better from here. And so I think our low is already doing really well. So here's why we're bringing up multifamily. You can get wedge deals in multifamily. There are generally two ways you can get a wedge deal in multifamily. You get something that's below market value in terms of rent, or you get some kind of inefficiency. Usually it doesn't make sense to try to renovate multifamily because you're competing against sophisticated investors, and sophisticated investors in multifamily, they're not going to give a property, or they're not going to let the market discount paint and carpet, right? On single family, they do because they don't have the interest in trying to scale single family. So there's so much less competition in single family. It's amazing. This is why you get wedge deals on condition on single family, on rent or efficiency in multifamily. Well, in this case, we, for HouseHack, have made an adjustment. Our board is approving this adjustment. And they're allowing us to purchase a property that will end up being more than 10% of the HouseHack assets we have now for nearly $16 million. And it's a deal that I believe we're probably getting $2 to $3 million under market value. And we're not even going to have to lift a finger on the wedge value on that. That's because we think we found somebody who's in a situation where they've got a mortgage coming due and payable. We negotiated the deal around some of the highest interest rate environments where it just didn't make sense for any other buyers to actually get a loan and buy a property. We're buying the property cash. And because of that, as well as our ability to close quickly, we believe that we got an incredible discount on this deal of, again, potentially $2 to $3 million off the value of the property. Beyond that, I also, to finalize the deal this Friday, flew to visit the seller in person. It's actually Thursday. Flew to visit the seller in person to close the deal and get another over $300,000 off, approximately. This was the tool of being able to say, hey, seller needs a little bit of convincing to finalize the deal. What if Kevin comes and meets you tomorrow? Oh, are you able to come out that fast? Are you sure? I mean, it's a flight away and a drive. We're there. Okay. Not even a chance for people to blink and think before confirming. The objection solved. Boom. We meet, shake hands in person, and finalize a real estate negotiation. Those are the things that I'm doing when I'm not here on YouTube. Sitting down with sellers, real estate agents, contractors, and not only trying to make sure we are building relationships everywhere we're going, but we're maintaining our word. That's really important. And look, every company and individual will always make mistakes, but one of the most important things when it comes to real estate is making sure you can preserve and build relationships. We want people to come to us who say, look, you know what? Hey, we're in a tough spot. We want to make a deal with you, win-win. Can you buy this deal cash because we got to get out for XYZ reason? It's not like we're ripping anybody off. We feel like because we are in a place where we can offer people great deals and quick closes, we can get really good deals right now. And so that's what we're doing. We're executing on these. We're managing the properties ourselves, perfecting our in-house property management, and we're growing what we think will be a company worth more than Zillow, Redfin, and Opendoor combined in valuation. And that doesn't even consider the real estate that we own. Because we believe the true valuation for HouseHack, and this is the part where investors always ask, like, okay, well, how exactly do HouseHack investors make money? Well, I've said it from day one, but I believe that HouseHack investors make money through capital appreciation and owning a share of this company. I personally want to grow HouseHack to a point where once we get through phase 1 and we can do our phase 2 MiniFunds, we're able to prove a model that is so valuable that you're going to end up picking up your phone, whether you're an Apple or an Android kind of person, you're gonna go, Kevin, if this is what you're able to do, please buy 10 more jets. Go do more of this. No, I make that joke, obviously, and I want to be very clear. HouseHack still has not paid a single dime of expenses for this plane. I want people to look at what we're able to do with HouseHack and go, please, can we be part of this? And can you do more? Now, I mean, look, anything can happen. We know that. But I'm so excited. Here, what's today? Today's December 30th, 2023. I'm so excited about 2024 because 2024 is when not only do we go from proving phase 1, but we go to MiniFunds in phase 2. Phase 2 MiniFunds are going to be really fun because that's where you're going to see, because I know people are asking, I see what individuals are saying. We are going to have every MiniFund, whether it's one or many, whatever it is, show exactly what property is in every single MiniFund, the address, the Matterport scans, the details, whatever we got on every single deal, the cash flow, the projections, the valuation, everything. That's part of phase 2. It's not part of phase 1. Phase 1 is like, let's get the foundations built. And that's what we're doing right now. And I think we're doing a really good job of that. And it's not easy. HouseHack is a company that is audited, for example. we are at the last few days here of the year, and one of the things that I've been doing is, quite frankly, most people are off because, well, it's the holiday time and they deserve to be off, and I think that's great. I'm up sometimes until 3 or 4 a.m. quadruple checking our numbers, our budgets, making sure we are audit ready, because as soon as December 31, 11:59 comes around, boom, we go into 2024, snapshot of the last 6 months gets audited. And that's really important for investors, but it's also really important for everybody in the company to know, like, we gotta have our act together, because it's not just what we say, it's what our auditors say that matters. Some other things that we're doing in addition to acquiring now multifamily real estate, which shows that we can do wedge deals on multifamily, again, where we don't even necessarily have to lift a finger and get some delicious wedges. We're continuing to expand our purchases in single family, but we are also moving, I'm not sure if I provided this update yet, but I'm going to. We're also moving to license HouseHack as a real estate brokerage in the states that we're expanding into. That'll take time. And I can use my California real estate license. Usually I have to take like a discounted version, so to speak, of a test in like a different state. They're kind of like, okay, you know, we can give you credit because you have a brokerage in California for XYZ, but you still have to do ABC, hoops and hurdles, whatever. But then I can license HouseHack as a real estate brokerage, and HouseHack, if HouseHack writes its own deals, there we go, it would earn its own commission. Now, we don't want to burn any of the real estate agents we're working with. So obviously, if agents bring us a deal, we're going to work with them. They're going to make a commission. But it enables HouseHack in certain situations where agents are like, look, we can't do dual agency on this because there are attorneys involved, there's a probate or whatever. HouseHack can just write the deal and earn the commission, which is great. But then it also gives us MLS access, so we have substantially better data than what you could get just on like Zillow or Redfin or Realtor.com. I think I'm in like 7 different MLSs already for California on behalf of HouseHack. And I have not earned a single dime off of HouseHack in terms of commissions. That's another thing people have asked. It's like, well, are you just milking auto commissions off the top? No. I don't blame people for asking these questions, but it comes from this point of view. It's like, what's the motive here, Kevin? It's not to make a commission. It's not to have a private jet. It's to create a multi-billion-dollar company. It's that simple. Like, in the future, if this works out, people are going to be like, $12 million down payment is what you personally put into, plane, right? Into being able to run these companies. Well, that was a really good investment, because that turned into much, much more, right? And I want every investor to be on that ride. No guarantees, but that is me showing I'm putting my money where my mouth is. That's a huge liability that I'm paying for. And that's my confidence in what we're doing. I don't know that you could really sign up for any more confident than that. Another thing we're doing is we're setting up a couple individuals, including our staff attorney, as an in-house notary, which is super exciting because it just makes things a lot easier and faster. You know, people sometimes are like, oh, well, you could just get a notary at the local UPS store. Try that when you're negotiating a deal and you need something notarized for escrow, this, that, or whatever, and the notary at the UPS store isn't in. There's an hour wait. You gotta make an appointment. You gotta drive there. It's a pain in the butt. So we're just essentially licensing 2 individuals in the company as notaries so they can also notarize each other, which is kind of cool. So brokerage licensing, audits, notaries. Another thing that we're going to do is we're working on a new launch of the HouseHack website, so stay tuned for that. Right now, it's really just a placeholder, which will be great because it'll also be customer-facing, and it'll have like a little investor section with investor portal links and all that stuff. Remember, stock certs, we're still looking at probably later in Q1, but we're getting those out. We got to move them to a different transfer agent. There's some work to do. But anyway, we're probably going to have an investor relations page that'll be very eHack style. So that way you can get all of your HouseHack updates in just sort of like one scrolled page. We think that'll be super useful in addition to obviously YouTube and Twitter. Right now, it's not the easiest to understand where all the updates are. So I'm aware of that, and we're working on fixing that. So that's coming. And then tomorrow at 8 a.m., we're going to give a really quick sample video of just a before and after of a deal that we renovated. This is like super basic. This is like 2018 Kevin. It's like, come on, like Kevin, we do this in our sleep. But some people have been asking for it, so that'll post tomorrow at 8 a.m. on the HouseHack Homes YouTube and Twitter channel. So stay tuned for that. Actually, I'll probably schedule it on time for YouTube. I can't schedule videos easily on Twitter, so I'll manually have to post that later. But anyway, so that's a pretty big update. I mean, think about that. Oh yeah, MiniFunds, right. Let's just dive into that a little bit more. That's really like a Q2, Q3 thing. And we really need to have each mini fund sit at probably about 50 mil in assets. So that's why we're going to call for warrants. So, and possibly fundraise a little bit. We don't need a lot, just so we can get our first mini fund rolling with 50 mil in assets. And that'll be a game changer. I actually think as an investor, you'll probably, and no guarantees, this is not personalized financial advice for you, you'll probably want to be in a place where you have exposure, well, to HouseHack ownership itself. I think that's a really big deal. But even for, when fundraising is not available for HouseHack until hopefully one day we go public, the mini funds are going to be a great deal for investors as well. We're setting up ways for you to be able to 1031 into them, invest in your retirement account. Basically, wherever your money is, we're setting up ways for you to do it and have access to real estate in a way that nobody has created access to real estate before. Better than syndications, trusts, Cardone, Fundrise, Roofstock, crypto, assetting, real estate, which is like really just a marketing gimmick. I mean, all you're really doing is you're securitizing real estate through, the blockchain. I mean, theoretically, we could do that too. We could just, one of our mini funds could just be blockchain based. That's not that hard. What's hard is the infrastructure, what we're building out, and doing it in the best way possible. Like dividing real estate into ownership has been done for hundreds of years, probably even longer. That's not a big deal. And the same can be true for using blockchain technology. But doing it with quality real estate, with quality management, and scale, and low to no fees, that's the game changer. And so when you think about HouseHack as the game changer. You're investing in the game changer, which is creating the product. And then the mini funds are the product, which are also a good deal, right? So it's like buying an iPhone is great because then you get an iPhone. So investing in the mini funds is kind of like buying an iPhone. Like you want it. You want it diversified or you got to have it. I don't know, maybe you're a Pixel person, whatever. We got one of those too. Okay? Buying into HouseHack is like buying into Apple. Okay, well, that's my take. Now, I want to be clear. This video is not a sales promotion. It's not like, invest. There's no invest button. There's nothing for you to buy or do anything. It's just an update to investors. And obviously, let's be very clear. I'm extremely optimistic. Again, I'm extremely optimistic, okay? I'm just like, sign me up for whatever risk I need. I'll sign on any HouseHack debt to make sure I can set HouseHack up in the best way possible. The $25 million credit line, we're working with JP Morgan. They're like, Kevin, you're going to have to personally sign for this. I go, oh no, I don't know about that. We'll have to negotiate. I hang up the phone. No problem. Like between you, me, and anybody else watching, probably JP Morgan, watching this video, no problem. Sign me up. That's how much I believe in HouseHack. So anyway, but yeah, like obviously, no guarantees, duh. Everything I said could fail. Should also be a duh. So yes, as the SEC who would come down from the heavens and go, Kevin, balance your video. You could lose all your money in mini funds and in investing in HouseHack, in walking out your front door. Yeah. I don't know. I have a hard time honestly saying that because I'm like, how do you possibly lose money investing in real estate? Like, you really have to screw up. But I guess it is possible. Anyway, Thank you so much for watching. Leave comments. My goal is to really go through the comments and then address those comments in the future updates I make. So anyway, thank you. I really appreciate all of you. Hopefully this provides a very detailed and thorough update, and we'll be providing more soon. And yes, don't worry, there'll be pictures, there'll be details, all that good stuff. Just know, when it comes to the real estate we're buying, we're starting with the best quality, okay? And we're gonna move through the quality chain. But it's a lot easier to build really good foundations with high quality before going into medium quality, before going into low quality. The management intensity is like 0 with high quality real estate, and it goes straight up with low quality real estate. That's why, you know, sometimes you look at a property in a certain area like, oh, it's a 10% cash on cash return. It's like, yeah. Well, it's also in a bankrupt town and you gotta collect rent with a shotgun. Anyway, thanks so much for watching. We'll see you in the next one. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.